Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest tonnage updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions, always. Well, ladies and gentlemen, we got a lot to talk about, so buckle in, because today we got insane XRP news, connections between Ripple, XRP, and DTCC that could reshape finance as we know it. We're heading into full-blown tokenization in 2026, and Ripple XRP is going to be in the driver's seat. Before we dive into this, ladies and gentlemen, I just want to thank everybody that takes the time to like, subscribe, and comment. These three things really help us out and helps the channel grow and gets this information to the broader crypto market. And for that, I thank you very much. Let's break this down and dissect this now. I want you to think back to the early 1970s when the U.S. went off the gold standard. People didn't realize at the time, but the way money moved globally just flipped. That's the scale we're talking about here, but for digital assets. I want you to imagine the printing of the Gutenberg Bible in 1455. Suddenly, information that was scarce could flow freely. Tokenization is that leap, but for money, assets, and financial infrastructure. We'll break down all the updates, numbers, and partnerships so you can see exactly why XRP is at the center of this revolution, ladies and gentlemen. So here we go. DTCC tokenization announcement. First, the DTCC just announced plans to enable participants to tokenize assets by the end of this year. 2 weeks ago, Naeem Sharkar, Managing Director and Global Head of Digital Assets at the DTCC, spoke about how blockchain is reshaping global financial markets. And back in December 2025, the DTCC received a no-action letter from the SEC, giving them regulatory clearance to launch tokenization services. For 2026, tokenization service is set to go live in the second half of this year, letting participants move assets into wallets on supported blockchains. It's massive. Think about that. I want you to think back like the railroad boom in the 1800s. Back then, goods moved across continents in hours instead of weeks. Tokenization is that same leap of money and assets, instantaneously, globally, and 24/7. The long-term ambition, ladies and gentlemen, tokenize all 100 trillion of DTCC assets. That's trillions with a T. To put it in perspective, stacking 100 trillion in $100 bills would cover the state of Texas more than 5 times. Or imagine trying to transport the amount across the Atlantic in the 1600s, like the age of exploration. The scale and risk were enormous, but the potential for wealth and global connection changed the world forever. The DTCC is partnering with Layer 1 and Layer 2 blockchains to make asset movement seamless, with a focus on collateral and liquidity, plus a collateral app chain launching in 2027 to speed global asset transfers and reduce friction. Now, I want to talk, here's how Ripple comes in, okay? Stay with me. The acquisition of Hidden Road, now Ripple Prime, gives them direct operational access to the U.S. Treasury market through the DTCC. It's massive. This means XRP and RLUSD could be used in institutional settlement processes. Ripple's XRP Ledger is leading Layer 1 for real-world asset tokenization, continuing to grow despite market volatility. Naeem Sharkar explained that the DTCC is starting carefully, focusing on a smaller subset of assets to begin with, but with the aspiration to eventually tokenize all 100 trillion. Imagine the Medici family in the Renaissance Florence era, who leveraged banking and commerce to reshape economies. Ripple is doing the same for digital finance, creating an infrastructure that could redefine global liquidity. So what does this all mean, you're probably asking? DTCC's partnerships with multiple blockchains allow participants to move assets freely anywhere. The real leverage is in collateral and liquidity, the beating heart of tokenization. By next year, the collateral app chain will let people move collateral globally at network speed, cutting friction, freeing capital, and making markets more efficient. Sharkar has talked about doing this in roughly 50 weeks, and Paul Atkins, former SEC head, predicts that all this value could be on-chain in the next 2 years. That's like moving U.S. Treasury payments digitally and instantly instead of waiting 2 to 3 days. Revolutionary, this is, in my opinion. It's massive. You really got to let this stuff sink in, ladies and gentlemen. This is huge. I want you to think of it like the naval innovations of the British Navy in the 18th century. Trade moved faster, safer, and more efficiently. Blockchain is now the naval power for global money flow. I want to talk about tokenization goes mainstream. Tokenization is no longer experimental. After the Genius Act clarified stablecoin rules, institutions know how to bring traditional assets on-chain safely. Blockchain can move securities and cash instantly, cutting counterparty risk for trillions in assets. That's enormous. Let that sink in. Marinate on that for a second. Ripple's connection is mostly infrastructural via Hidden Road, Ripple Prime, a member of DTCC's Fixed Income Clearing Corporation, FIC, participating in U.S. Treasuries clearing since March 2025. This allows Ripple to route institutional clients, Treasury, and fixed income transactions directly through DTCC rails. Imagine Fedwire in the 1970s, now enhanced with XRP as the instantaneous lubricant. Or think back to King Solomon organizing Egypt's treasury. Careful management, transparency, and scale. XRP Ledger is doing the same thing in a modern, decentralized way. I want to talk about Ripple's full stack. Ripple has also G-Treasury, Treasury Solutions, Rail, 10% of global B2B stablecoin payments, Palisade, Wallet as a Service, Custody Solutions, institutional grade custody. Together, Ripple has a full stack financial system capable of competing with banks like JP Morgan. Tokenization is gaining serious momentum in 2026. $25 billion in tokenized world assets led by U.S. Treasuries at $10 billion, targeting $100 billion year-end. Exchanges like NYSE and LEG building 24/7 on-chain trading. Banks like BNY, Citi, Lloyds, Societe Generale are issuing tokenized deposits and bonds, and JP Morgan launched a tokenized money market last year. This is reminiscent of Rome building aqueducts and roads, complex infrastructure, enabling resources to flow efficiently and reliably across vast regions. I want to talk about DeFi and XRPL innovations. DeFi is expanding. XRPL, the ledgers like VET created the first native loan on XRP Ledger using XLS 66D lending. Users can lock assets, borrow against them, enforce loan agreements, automatically on-chain. No banks, no middlemen. As Shia Berles said, XLS 66 paves the way for institutional DeFi in vaults with improved UX. Evernorth is exploring yield generation while growing the XRP ecosystem. Think back to early Babylonian banking systems, where credit and lending rules allowed civilization to grow while managing risk. XRP Ledger is doing that today at a global scale. I want to talk about global pilots and real-world assets. Global pilots are moving fast. Japan SBI launched on-chain bonds rewarding investors with XRP instantly, targeting retail investors. Dubai plans to tokenize $16 billion in real estate by 2023. Already 5 million tokenized on XRP Ledger. Developers are bringing diamonds, property, and other real assets on-chain. This reminds us of the Silk Road connecting Europe and Asia, allowing commerce, information, and wealth to flow across borders. And like Joseph managing Egypt's granaries, tokenization turns physical assets into structured, secure, and manageable resources for prosperity. Think back to the tulip mania in the 1600s. People wanted to own a share of something tangible and tradable. XRP Ledger is doing the same thing today, but scalable, global, and secure. The XRP Ledger exploded from the 25 million assets at the start of 2025 to 560 million by year-end, and now over 1.5 billion. Growth is accelerating, and the infrastructure is compounding. So there you have it. Ripple, XRP, and the DTCC are leading the 2026 tokenization boom. Institutional, adoption, DeFi, real-world assets, all happening now. As XRP Ledger grows, think of the Renaissance explosion of art, science, and knowledge, where innovation compounded quickly once infrastructure and networks were in place. Tokenization is the renaissance for global finance, ladies and gentlemen. If you found this useful, like, share, and leave a comment. Tell me what you think about XRP's next moves. Well, ladies and gentlemen, if you made it this far, I do appreciate you. Time for the ice, the candy at the bottom of Italian ice. It's a lot to happen right now, a lot to go over. Been on the phones nonstop. Like I always tell you, we pay attention to what's happening in Asia first. I want to welcome all the new members of our Patreon and all the new members of our membership channel. Thank you for joining. I love chatting with everybody. It's fantastic to see the wolf pack growing. I want to break this down. I'm going to approach this like I approach some of our calls with family offices, sovereigns, and institutional clients to let them see what we're seeing and how we see this again, right? So stay with me. So the SBI launching a 10 billion yen on-chain bond, offering 1.85% to 2.45 interest plus XRP rewards, aiming to attract retail investors with a hybrid structure, combining fixed income, digital assets. This is tokenized infrastructure, ladies and gentlemen. The bond is fully managed on-chain through BOOSTRY's IBET for Fin Systems, with trading set for 2026 on the Osaka Digital Exchange. It's highlighting Japan's rapid adoption of regulated tokenized securities. So it's expanding XRP's utility. XRP rewards of 200 yen per 100,000 yen invested extend the token's use case beyond payments, potentially increasing demand as Japan remains a major hub for XRP trading activity. This is so huge. Again, so what this means in English, SBI Holdings is advancing Japan's tokenized finance landscape with a 10 billion yen, 64.5 million on-chain bond that merges traditional yield with XRP rewards. The 3-year issuance offers semi-annual interest. Again, this is massive, ladies and gentlemen. So why I'm going to tie this all together, again, right? Being a financial mercenary, we play both sides, always, not caring. I tell you, I go all back to the times being on the floor of the Mercantile Exchange and trading alongside banks traders on the floor, knowing what they knew right away, even talking, having lunch with them. So it's no different. You don't have to hear what's going to happen on the news. We're trading alongside of them. And what we think is no different than what they think, because we're in the pits, in the trenches with them. Matcha tea, we got hit with 24 inches of snow. Crazy. So I'm going to tie this in, why that's important with DTCC and what's happening with the things that we follow. Again, because I really don't care what happens. The people that retain us in any capacity, and this is not financial advice. This is my own opinion, and anyone who retains us in any kind of financial capacity. This is not financial advice. Well, ladies and gentlemen, UBS expects gold to rise towards 6,200 as geopolitical tensions, including tariff problems, anticipated Fed cuts, and continued central bank demand reinforces its role as a portfolio hedge. With global demand surpassing 5,000 tons in 2025 and mine supply stagnating, structural imbalances and easing real rates are likely to support further upside in bullion prices. I keep bringing up tariffs contextually since they only light even more fires under the buyers who must hedge against anything, and as uncertainty keeps growing, they have to get involved. They have to. Now, we take a look at what Goldman's saying. Goldman Sachs says central banks are waiting for calmer prices while U.S. investors are chasing upside through call options and fiscal buys. And finally, with regards to what happened on price on Friday, that's why that moved higher again. So if I go back again, I like to tell you what people are saying and why the interpretation's happening and everything. Again, matcha green tea, we got blasted with 24 inches of snow. Citi says Trump's temporary 15% global tariff under Section 122 follows Supreme Court strikedown of IEEPA tariffs and may stay in place for up to 150 days. Ongoing uncertainty, refund ambiguity, and modest negative for bonds and the dollar while potentially supporting gold. Steeper Treasury curves, higher inflation expectations. Again, Citi says Trump's SCOTUS counter tariffs, bullish inflation, gold. So basically, the Supreme Court said you can't do this, no good, don't press go and collect $200. So they came out and they did something different to get it under. See, so that's kind of what that is. In our opinion, it's bullish for gold, and that's why the markets rallied on Friday. So there's measures and countermeasures. Things happen, and then you got to keep on going. So again, you can see this. We're paying attention to DTCC, how they're intertwining. Japan, SBI, how that's looking with XRP. XRP broke. It broke the 138 level. It fell as low as, I think, 133. It's trading around like 136. Again, institutions are not looking at daily price charts. They're hoarding this. Again, as the remora, we hoard. We're doing what the apex predator as a remora underneath it. We will not get cut up like sushi. We will commit to our Gucci convictions of why we're doing what we're doing and why we got involved in the first place. Again, and for all the haters who write on the comment section, I love you guys too. Keep bringing the hate. I'm going to keep bringing the love. That's all that I'm here, because I'm not here for you. Ladies and gentlemen, also, uranium's hot right now. There's too much demand, but not enough supply. Uranium's good for the nuclear trade. So that's what it is right now. Again, with gold, there's no shorts. People that sell it as a fundamental of the market, but people want to be long. People either want to buy it or they need it. So there's no shorts per se. Okay. Everybody needs the gold right now for different reasons. Everybody, and goes back to what we were saying about the BRICS and the east side of the tranche. With their move to make gold an HQLA, high collateralized leverage asset, high quality leverage asset, now they want gold to stay in place, and you could take a loan against that for any kind of project, which is coming down the road, right? So, they need it for whatever they need it for. It could be for repo, it could be for insurance purposes. It's a replacement for U.S. Treasuries. I keep telling you this all the time. It's an attack on the U.S. dollar. So let this sink in. So if they're attacking the U.S. dollars with the Treasury system, we just spoke about Ripple being involved with the Treasury tranche, the Treasury system on that side of the west side of the tranche. So think about this. G Treasury. They're blending themselves and weaving themselves directly inside of the west side of the tranche. Do you realize how big that is? It's so big. I can't stress this enough. I was on the phone explaining this, that wherever we're going, infrastructure is the most important thing. Infrastructure. I was telling a lot of family offices, again, and on this call, this office happened to be involved with a lot of our concessions and our pilot refineries we did throughout Indonesia in the last 10 years, solvent extraction, electro mining with platinum and palladium. Except there we had to buy ore because you can't own the ground over in Indonesia, So we had gone and done geological surveys in Halmahera, Sulawesi, the Maluku Islands, Spice Islands. We had done so many, Kalimantan, Indonesian born, Papua New Guinea. We had done so many geological surveys to find the perfect ore from artisan scale miners, ASM miners. If anybody doesn't know what an ASM miner is, those are the guys that come out with a pickaxe and they just dig up the ore, the rock, okay? And we found some places that had phenomenal ASM mining going on islands. The main problem that we had, and stick with me, I'm going to loop this in, was infrastructure. There was no port on these islands that could keep up with the logistical demand that we were going to have for ore to come in and come out. We would have to build a port. Now, you'd have to go through AMDO reports, all kinds of things to get that done. And the real hesitation before committing there was that we would have to build infrastructure projects. And now sometimes the people that didn't want us there, they even if we said we do roads and water, plans for them, they didn't want us there. So we had to respect what they wanted to. So without the real infrastructure, we passed on certain areas because we could not get enough ore out in the capacity at scale to feed our refineries that we were building. We just couldn't. And I always wanted to go back to that, because again, so why I say this right here, if you don't have the logistics in place to go to economies of scale with production, you're not going to be able to scale up to where it makes sense with everything, right? So again, talking about infrastructure, Ripple, through their genius and forward-looking, has acquired the licenses in strategic places. And stay with me again. I'm going to go through stablecoins later on with this in the next part of this rant about why this is so important. And ladies and gentlemen, if you want to understand how we're going to capitalize off of this chaos and how this translates into making alpha, come join the Patreon. That's where we really tell people how this is going. You get financial advice there. But stay with me right here, right now. Infrastructure. Ripple took the time to build all the infrastructure. It's there now. Now they can scale. Now institutions can use it. So again, going back to what I said in Indonesia, we passed on certain islands that I wish had the ports to use that. We just weren't going to sink the money in to build ports because we couldn't get it passed enough in certain areas, so we went other places. So without the right logistics, you could have the greatest idea. Without execution, it's not going to work. Ripple is executing. It's executing. It's very, very important. So again, you have the BRICS with the HQL going after the Treasury system, and on the west side, you have the Treasury system with Ripple intertwining with it. Okay. So I'm going to keep on going right here, right now. So if I look at, everyone always likes this. We don't ever like this. So we're looking at gold and silver, WTI, and a bunch of other things, right? from a geopolitical risks are likely to stay elevated, ladies and gentlemen. We're paying attention to this right now, and this is super important. If you got to rewind this, go back and rewind this, write this down, okay? There's 2 aircraft carriers in the region. Fighter jets or refueling tankers reportedly stationed in the region, okay? The U.S. military buildup is now bigger than that off the coast of Venezuela in the weeks before Trump took out Maduro at the start of this year. Whether an agreement with Iran can be reached remains to be seen, as military action against Iran in the near term seems increasingly likely. But broadly speaking, geopolitically remains uncertainty is likely to diminish given Trump's approach to foreign affairs. Again, rewind this. While geopolitical events do not tend to have a lasting impact on global markets, ladies and gentlemen, they can trigger temporary strikes and volatility. I always tell you this, money managers are going to capitalize on the flow of money in places and assets. They have to make their numbers. Again, on the For the Mercantile Exchange, I had to win every day. I had to make money for myself so I could eat, my family could eat every day, and my benefactors could eat. That's why we don't marry the stories and narrations. We see what's going with, and if you watch the last video, you know what I was talking about. You have short-term, medium-term, long-term. Again, so the volatility is your friend. It's supporting demand for portfolio hedges like gold. None of this is financial advice. It's just my opinions. Again, moving on, not financial advice. The Fed's easing regime should continue to support gold. A weaker U.S. dollar and lower U.S. real interest rates are supportive of gold. And we believe this macro environment remains intact as the Federal Reserve has more to go in its easing cycle. Despite stronger recent job gains and the hawkish elements in the latest FOMC minutes, easing inflation pressure in the coming months and a more dovish personal profile of the Fed late this year should support additional rate cuts. That's what we believe. I told you this, that we believed in the first place that this man was put in for 2 purposes. Again, you got to take a step back. You got to see the trees from the forest from the trees, whichever way you say it. Tomatoes, tomatoes, same thing. Get the Gucci clarity, get excited, because as events unfold, you take advantage. We take advantage. I always tell you this again. So XRP being woven in with SBI and the moves they're making right now with that new product is fantastic. Again, I am in the camp that we believe things are going low before higher. Someone asked me on the phone, where would I sell my XRP? And I said, I don't know where I would sell any of my XRP if you're asking me this, and this is not financial advice, because I don't know what the broader landscape is going to look like for fiat currencies. I don't know what metals are going to be priced at. I don't know. It's when someone asks you where you would get out, unless you have a strategic reason of why you're getting out, and that's your short, medium, long-term play, there's no reason really to give just a hypothetical answer. There is none, because I don't know. I said I am looking at the long term, and in times of major chaos, I wait for true conviction of where the world is going. But I'll have to get back to you on that. I said to him, laughed. Says, I always talk like I'm a fortune cookie. I want to start out with just what right here, drilling down with gold. From my perspective, the recent moves look like classic dip buying. Think of it like catching the knife repeatedly, and now we're seeing the market push higher. When I assess the positioning, it's clear to me there aren't many true shorts in gold right now. There aren't really conventional sellers. What we're seeing are participants who either need gold for immediate purposes or are in the market to buy it. Everybody needs gold at this point. It's not speculative. It's fundamental and functional right now, demand. Again, we keep talking about HQLA requirements, repo activity, insurance, and even alternatives to U.S. Treasuries. I'm repeating myself right now because I need you to remember this as I drill into your head about why this is making sense of what's happening at the broader picture. Because if you can see what we're talking about, where we're going, remember, that's the most important thing, where we're going. That's it. These are the real drivers of demand, and they're not going away anytime soon. We look at silver, we're observing similar technical patterns. This is not financial advice. Again, silver dropped and it pushed higher, so more people are becoming bullish. And that's when you look at the chart. So if it can navigate through the 89.90 area, the path opens towards $84. Remember, we were afraid when it was dropping last week, but it held on in certain areas. It could go as high as 110. And this is a purely technical observation. This is coming from Domenico and in our room of surgeons, of analysts who look at charts all day. I rely on him and everyone in the Patreon. He's the one who's always doing the reports, besides what else I say. But according to him and what we see from technical observations, when you examine the recent price action, there wasn't much constructive trading on the way down. The market essentially collapsed, meaning there was very little residual selling pressure in the 90-94 zone. So instead, we anticipate. My personal opinion, not financial advice. There could be strong buying interest, which is evident in long candles we're seeing in practical terms. So we're watching where it goes around here right now. So that's just what we're looking at right now. Again, things could be moving around in different ways because everyone's paying attention to the soap opera of chaos, which is the Middle East right now. People, it's almost like WTI crude oil, the market's demonstrating constructive behavior, but it was upset because there was no attack over the weekend or anything like this, so it looked like it was bearish news. That's crazy, but it is. So example, with the absence of a conflict with Iran caused by temporary dips, but oil has recovered to unchanged levels. So in English, it looks like the market wants to go higher, but there has to be a true bullish catalyst. Until that appears, we could see up. It's going to stay in a range. But when it does appear, we could see a rapid upside movement by a few dollars in short order. Why that is because the money that's being put to work needs a place to go one way or another. So once they got that signal, that flare, everybody's going to pile into that trade. It's just what's going to happen. Not financial advice, my opinion. Once that goes off, that's where the short-term money's going. Again, I don't really care. I'm going to talk about Bitcoin for a second. Again, I don't care. I like this coin. You like that coin. I like whatever makes us alpha and makes my bank account bigger. As a financial mercenary, I don't care what happens. I don't care what happens. I'm watching 15 markets, and one of those markets will give me what I need every short-term day, a mid-term day, and a long-term day. And that's how you blend it all in. That's the secret sauce, the specialness, I want to call it. That's where you get Gucci clarity by following all these things. So with Bitcoin, again, we're not calling a bottom yet, but we're starting to put it on the boards right now because their critical levels are clearer. Above 71,000, the market can become a little bit bullish, with upside potential towards 90,000. Conversely, falling below 65,000 would signal caution, and a break under 56,000, well, that's outright bearish. But Bitcoin's in a consolidation zone right now, so we're looking at that, and it's catching its breath from a tactical standpoint. So this sets up for one of the, sets up for a lot of things that are very exciting watching all these different things going on right now, okay? In summary, what we were just talking about, again, gold remains in high demand due to structural needs. Shorts are minimal. Silver is following a similar pattern with bullish potential emerging. Oil is responding constructively to both bullish and bearish cues. The market wants higher prices. Bitcoin is consolidating, establishing clear technical. So our current stance, increasingly bullish on gold. We're optimists on silver. And we're optimistic on oil as well. We're watching Bitcoin closely, and we're very bullish on XRP, ICP, HBAR, XLM, XDC for a number of reasons. We're bullish on them for a structural reason, right? That is a structural reason. You've got to have infrastructure. Go back to what I talked about, the port in Indonesia that we didn't build right now. Ladies and gentlemen, I'm going to tie this in right now to a lot of things. Stay with me. It's a lot to digest. Again, I'm trying to take the PhD out of PhD. Again, this is important now. Now we're going to go back to the West side, the stablecoin regime that is so important, and why the East doesn't want them there. And the East said stablecoins no bueno. Stablecoins are nothing but treasuries wrapped and the dollar wrapped in some other kind of gift package, right? That's what that is. Stay with me. Standard Charter expects the stablecoin market cap to reach $2 trillion by the end of 2028. So the aggregated fiat stablecoin market cap is $266 billion, with USDT and USDC continuing to dominate. USDT and USDC accounting for 69% and 28% of the current stablecoin market cap, respectively. The two stablecoins have expanded by 28% and 32% over the past year. Outside of USDT and USDC, the remaining stablecoins have an aggregated market cap of just $9 billion. So in terms of market cap, distant third and fourth place are PayPal's PYUSD, 4.07 billion, and Ripple's RLUSD at 1.56 billion. Okay, PYUSD has likely seen the largest relative increase in market cap over the past year, expanding from USD 778 million in February to 2025. Ladies and gentlemen, Standard Charter believes 2/3 of the anticipated USD 2 trillion stablecoin market cap will come from emerging markets. This is very important. Stablecoins have been pitched as a new way for users in emerging markets to gain exposure to the US dollar, partly driven by the debasement of local currencies. This has largely proven to be true to date. So if you want to look at where this is, if you look up Google searches for both USDT and USDC over the past 5 years, they're the highest in countries like Cambodia, Laos, China, and Nigeria, jurisdictions where traditional access to dollars is strained. Okay, so a recent survey by stablecoin infrastructure firm BNVK found that the desire to get paid in stablecoins is the highest in Africa and APAC. Among the survey's respondents, a higher proportion on stablecoins in low and middle income economies, 60% than in higher incomes, 45%, with Africa leading at 79%. The survey also found 85% of respondents in low and middle income economies say their country's economic situation influences their use of stablecoins and cryptos. Let that sink in. So last week, we noted on a video that trading volumes for USDT against the Turkish lira, TRY, has outpaced BTC and TRY trading volume by nearly 4-1 on popular Turkish exchange, BTC Turk. We noted that stablecoin adoption and emerging markets could act as a stepping stone towards BTC and other digital assets adopting familiar users with novel concepts like private management. Ladies and gentlemen, it's so... I'm going to tie all this in. And if you're still here, I appreciate a like, not for financial advice. As the remora, we're swimming underneath this. I went over today about stablecoins, what Standard Charter's talking about. Went over today about the DTCC moving forward with a lot of things. SBY, that's massive XRP. Ladies and gentlemen, I don't intend to sell my personal XRP whatsoever. I believe chaos is coming. That's in my own belief. I believe that. I believe the answer for the West side is to build something new, as the East side takes plays from a different playbook. The Bancorp, going back to what happened in Bretton Woods, what they want to do. They just want an alternative to the Treasury system that people can use to collateralize assets and do business. Will they get their way? I don't know. They're trying to do it, right? Ripple had the foregone conclusion to marry themselves in with products and services for their catalog of companies through G Treasury. And the other ones I spoke about. So you see this right here, right going on. We just spoke about the stablecoin space. Why I'm paying attention to this is because these are the reasons I just went over why China and the West side, China and the East side don't want them there. Okay, so that's why Ripple getting all the licenses for RLUSD, Ripple moving to become a bank, Ripple with all their acquisitions, they're doing it. It's happening. Now, I see all the haterade on this, right? I don't like it. The chart, it's going lower. Stop talking. Listen. Exactly my point. You probably don't even have a position, and that's why you're throwing up haterade. It's not the point. The point is this. Something big is coming. This is not financial advice. The changes are happening right now. These changes, I gave the analogy like this. What you're seeing to the financial system, the changes, in my opinion, first was like a child going through adolescence, a woman or a boy going through menstruation or puberty. They're getting the testosterone, estrogen. Okay, it's going to take some time to go, but the changes are coming. It's not going to be like when we eat something and an enzyme catalyst breaks it up 1, 2, 3, like bam, 1, 2, 3. It's not going to do that. It's not going to do that. So here, as the West side of the financial world evolves, the clear winners, in my opinion, will be people who have licenses, people who have woven themselves into the success of the new financial world, the new financial market. I never put price targets of where something will go, where I'll sell, because that's not what I do. That's not who I am. Again, the world is changing. The chaos, capitalizing off of chaos, if you made it this far, I do appreciate you. The markets will move right now, and they're waiting for some form of rock to be thrown through the placid lake of the markets right now with the Middle East. Once that happens, that will dictate where things are going to go right now in the short term. But that does not change the long-term outlook about why people are positioning what they're doing. So what I am doing for myself and anyone that retains us any capacity institutionally, for everyone as well, family offices, we're hoarding as much as we can at these cheap levels. We are waiting for the levels to be approached, setting limit orders to purchase. That's what we're doing. We're respecting. XRP continues to have institutional inflows into their ETFs. Why? It's the future. Cat's out of the bag. Cat's out of the bag, ladies and gentlemen. It's the future. There's no other cryptocurrency or institution that has gone as far as they have for utility purposes. Again, I'm not some person who likes one asset or another. To me, all these assets have a place in our boards of where we're going globally and when to harvest. It's like farming. We plant seeds waiting to harvest them. That's what we do. I look at investing, and this was taught to me on the Full Mercantile Exchange. Investing is like planting and harvesting. You plant, then you harvest. You plant, then you harvest. Everything takes a different time to mature. With that said, ladies and gentlemen, I love you all always. This content is for informational and entertainment purposes only, should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd reacting after the move, rationalizing out why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift. The one who positioned early, not randomly, but intentionally, because some moments in history are loud, but the ones that change everything are quiet, right into the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues to develop behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes? Smash that like button, ring that bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all always.